everybody. My name is Sasha Starr. It's a modern investing, and our guests today are Dr. Milan Somborov. Welcome to the show, Milan.
Thank you for inviting me. Delighted to be here.
Great to have you. And Jim Eat from Eat Foundation. Welcome to the show, Jim.
Thank you for having me, Sasha. It's great to be here.
Okay, we are very living in very interesting times. The market is, I would say, climbing a wall of worry. It was down substantially yesterday. And it seems to me this is, I'm not going to mention any market makers or any professionals who are doing their job, trying to extract stocks from us. And actually, what I want to mention is that the beauty of selling covered calls on your favorite stock is that it provides you a cushion that allows you to weather this downwards movements in the stocks quite substantially. For example, on my own example, what I'll demonstrate you is that I have, of course, NVIDIA. I have it and I always have it. So what I did is,
It's popping today.
yeah, like many other stocks, what happened is that I sold April 28th, 272 and a half calls, and I got for it $4.51. Yeah, it's trading now at 310. I have a choice to close my positions or just keep it running, let them expire by Friday, and if not, then Nvidia will be taken away from me, and Monday I'll buy it back. It's one way or another to look at it. So that provides you that cushion. You obviously believe in this particular stock or some other stock that you might believe strongly, and that is a wonderful defensive mechanism. Besides, it's a wonderful trading mechanism because if, as when it was downward, for example, yesterday, I was playing with the idea to buy back the call at substantial profit, but I ruled against it because I was not sure how long will be this downward movement, and I thought that okay, if it will continue for a day or two, then this call for sure will expire worthless, and then Monday will sell other calls if choose to. And actually, market turned around based on brilliant earnings by Microsoft, and of course, it reflects all ecosphere of high-tech stocks and so on. Now, interesting enough is to note, again, in our discussions about um, the wisdom of buying a whole market as S&P 500 versus individual stocks. There's something interesting I'd like to tell you that um, the four stocks, Alphabet, Amazon, Microsoft, and Meta platform, which used to be Facebook, this four big tech stock alone account for 41% of the S&P 500's 2023 year-to-date gain. And so you see four stocks that provide you with 41% of upside of an S&P 500. So the rest of 496 stocks provide 59%, right? So, and if you will add to these four stocks, Apple, Nvidia, and Tesla, then we are looking at 86% of S&P 500 2023 gain. Can you imagine that? 86%. So the rest, 493 stocks, provided only 14%. These numbers are quite astonishing. I'm not saying that this is always the case or so on, but
No, of course not.
in my opinion, S&P 500 limits you great time. Also, I did some research on S&P ideas. For example, there is the ETF, Schwab US Dividend Equity ETF. The symbol is SCHD. Okay, this one provides more balanced view, the selection of stocks versus S&P 500. Also, it has less expenses. S&P 500 has 0.09, and this one has 0.06. So if that matters a little bit, probably it does. Also, it's paying high dividends. So I would also, it has options. So maybe the liquidity is not that of S&P 500. Maybe it has less liquidity. That's true. That one I didn't investigate because
I'm sure it's adequate. Yeah,
it's adequate. Professionals are using that alone quite a bit. So maybe, Milan, you should examine your ideas about S&P 500 as a whole American market, and the Schwab ETF is also a whole American market. But in some respects, it's better than S&P 500. Again, I'm not fan of either of those vehicles, but at least something maybe for your followers.
Well, there are different styles of investing. You know, what you commented on so far could lead to 12 hours of discussion.
Yeah.
I'm going to start out by saying this. I frequently tell our members on Monday morning that if you put down the SEC, Securities and Exchange Commission actions, and then put in any bank, you will see that they are fined in the millions regularly. They budget for it. That, however, does not apply to Schwab. Schwab is clean. Okay, so, but there are two issues that I'd like to discuss today because they're of major importance. And one of them is inflation, and the other one is securities that have artificial intelligence in them. Interestingly, for example, you mentioned Tesla. You don't think of Tesla as a stock that has artificial intelligence component to it, but it does because a lot of its manufacturing uses artificial intelligence. So let's talk about inflation, first of all. American and Canadian authorities have talked about a decrease in inflation that we've experienced recently. They expect it to be 3% by the end of the year and 2% by next year. However, consider this. Baby boomers make up 20% of the population, roughly speaking, 20% of the population, both in the United States and Canada, and they own a little more than 50% of assets. Many of the baby boomer assets are in cash or near cash, such as GICs or certificates of deposit or money market, because they're not spenders. So either they'll realize that they can't take it with them and start spending, or more likely, the next generation, Generation X, will inherit what the baby boomers pass on to them. Generation X is not afraid to spend, and there's going to be a lot of cash going into the market buying the same amount of securities that are available. So there'll be more cash chasing an equal amount of opportunities to spend, which will cause inflation unquestionably. There's just no doubt that once the Generation X inherits the money that they will from their parents, they're going to start spending it. More cash into the market will result in inflation. How long that inflation will last, nobody knows. Experts are not talking about that. I'm a dentist. I am not a financial expert, but that to me makes a lot of sense, that this inflation that should result from the fact that baby boomers are inheriting a lot of money, a lot of cash or near cash, will start chasing assets, which will cause inflation. So that's my take on inflation, and we have to be prepared for it.
That is a interesting analysis and one that I have not thought about. But I would say my first take would be that would be spread over time and wouldn't hit all of a sudden at once. Like all the baby boomers won't die at one time and pass on it. So we're not talking about an event like all of a sudden 2030 this inflation will occur.
Right.
But you're talking about over time.
Over time, yeah.
Will be perceived, and it'll be inflationary. So it's an excellent comment. And also, I would think that going back to what we were talking about with the index funds, you know, I used to work for Schwab, so I'm a big Schwab fan. Charles Schwab, in particular, was an excellent CEO. He's benefited from his success. And so I do actually own some index funds that Schwab manages. And so what we were asked last week was, what about the S&P 100? If the S&P 500 is a good deal, wouldn't S&P 100 be better? And I think the question really revolves around whether you think of quality versus diversity. You know, when I was first starting out in investing, you know, diversity was one of the key words that people kept mentioning. You wanted to diversify. But, you know, listening to Sasha every week, you know, it's becoming less and less important to me compared to, you know, being able to know about the quality of companies.
You know, let me interrupt you for a second, James, to tell you that we talk among Monday morning people. We write diversify or diversify.
Yeah. So the more you spread it out, like there's a Schwab 1000 fund. So, you know, you can pick your number. What is it? What's the right number? 100, 500, 1000? You know, there's no easy answer, but to do what Milan has done and look at the history over time, and you will see the 500 is a reasonable bet. You might, you know, like right now, you know, and what I always love about the stock market is okay, Alphabet announces, or Microsoft announces great earnings, so all of tech goes up. You know, it's nuts. You know, because the entire tech sector didn't change, you know, but people's perception of it did. And so they're buyers now. They're happy.
There are a lot of tech companies who are suppliers of Microsoft or who are working with Microsoft on different projects. So that could have been foreseen, obviously, that if Microsoft will move decisively higher as it did, so there were many stocks, not all, but many high-tech stocks would move up.
Sure. But, you know, it's a perception, not only a logical perception like the one you just articulated, but an emotional one, which is like, you know,
it is. Okay. Yep. So, it's emotional. It's also fear to miss out the earnings.
Exactly. That's exactly right. That's what people see, something going higher. They don't want to miss out. They get in. And they're getting in at the price that's higher than it was when you should have gotten in. It's too late.
With hindsight, everybody has 20/20 hindsight. But, you know, I mentioned, Sasha, when you asked me to do my spiel here, I mentioned that I'd like to talk about inflation. And the other thing I'd like to talk about is artificial intelligence. And so I looked at artificial intelligence stocks and was able to come up with 10 stocks which have a major component of artificial intelligence. Then I compared the performance of those stocks over a 3-year period compared to the S&P 500, which we invest in. By the way, that's the way my wife and I make a living, what we get from selling covered calls. And so I looked at these 10 stocks, and I closely examined 5 of them compared to the S&P 500 over the last 3 years, and every one of them has outperformed the S&P 500. The projections are staggering, actually, and I don't know who is making these projections, but I assume that they're qualified people. So these 5 stocks that I examined a little more closely outperformed the S&P 500, and if you are into momentum investing, then that's the thing to do, is buy them. So they're projecting Google, for example, Alphabet is to grow 17.4%. NVIDIA, you like NVIDIA, it's supposed to grow. Projections are 12.4%, and the Taiwan Semiconductor, 29% projections. And so we tell our members to look at forecasts for entertainment primarily, because they're wrong so often. But every one of these 10 stocks is projected to grow very impressively in the coming time.
You know,
Let me finish. Let me finish. I'm not quite finished here. At the end of March, more than 1,000 tech leaders and researchers signed an open letter calling for a 6 month pause in developing additional AI systems. More than 1,000 scientists said, let's stop developing AI system for 6 months. They will have a chance to examine that. So now, are we looking here in another dot-com bubble? If more than 1,000 scientists, knowledgeable people, not dentists, but people who know what they're talking about, say we got to pause this AI research, are we looking at another dot-com bubble?
I don't think so, because dot-com bubble was when evaluation of those internet stocks, all of them, was grossly exaggerating, and it was going higher and higher and higher, and there was no end of it. So it was obvious at the time, when more and more people realized that there's no room to grow, that they're so expensive, that all of them. And so when people started to sell, so that generated avalanche of stop losses and the people getting out of the stocks and margin calls.
In 1939. In 1939, yeah. Do we not need to be concerned about having 1,000 scientists say stop AI research?
Well, let me tell you a couple of things about that, Milan. One, it's an excellent thing to point out. The dot-com bubble, I'll tell you a little bit about how I made money. It was because I live next to Stanford University, and I was having lunch, and this one Stanford kid was on a date, and he was impressing his date by talking about his launch. And so everybody was launching their new startup company with a .com after it. That's when I knew to sell. And 3 months later, all this crash, this avalanche that Sasha was talking about, happened. And so everyone was crying, and I was like giddy. So all I can say is that, I don't think it's the same situation. It's when people are starting to think about launching. You hear your cab driver talking about, or your Uber driver talking about launching his AI project. Then that's the time to worry.
Yeah.
But I think that what you're saying about the scientists, what they're talking about is there's a scientific advance that's way ahead of the moral evaluation of it. So we have not progressed as to how is this going to impact society? Is it going to be a very negative impact on society? Because we don't know. The scientists are saying, whoa, let's take a break, and look at it in terms of what do we want to have happen here? Are we unleashing something that we will lose the control over the power? What Oppenheimer was afraid of when he invented the bomb.
Jim, but isn't it the same thing like in 200 years ago in England when steam engines started to get developed? Maybe they would say, oh, we don't know where it goes. We should stop for at least 6 months. And
there's a lot of anxiety about it because, people don't like new technology. They don't like new developments. They don't like things changing. It's very true. But this AI is got more potential power, I think, than, well, the steam engine certainly changed the world, but that's a good example. But it's that kind of comparison that's apropos right now. This could change our society.
Oh, it certainly will. It's more than equal to the Gutenberg press, for example. The entire world of the internet and digital phenomena is greater impact on society. It has greater impact on society than the Gutenberg press did. And what you're talking about, Sasha, about the steam engine, the Luddites, same thing. When people started replacing hand-woven cloth with a machine-woven cloth, and a guy by the name of Ludd, L-U-D-D, led opposition to it, there was a huge opposition to it because some people did lose their jobs. And so what will be required is for those people to upgrade themselves.
There will be an economic dislocation.
Well, there's the same thing like self-driving cars. Do you know how many drivers are employed in the United States and in Canada? And this self-driving cars and possibly trucks, a lot of these people will
Sure, yeah, yeah.
start looking for alternative jobs. And
It's absolutely.
so, what would you suggest, that there should be a movement against self-driving cars, because so many people could lose their jobs? I'm not sure.
So somebody opposed the idea that I brought up earlier, and that is that there needs to be a guaranteed annual income available to everybody at a minimal level, and some will abuse it. If a system is open to abuse, guaranteed it
Yes,
will
somebody.
be. But most people are proud of what they do, and they will not abuse. Not enough abuse will take place, and I don't know whether that's been used somewhere. For example, in Canada, we have a baby bonus that was started in Quebec to get Quebec votes and for the Liberals, and it seems to be working. Liberals are always ahead in Quebec because they started rewarding the having of babies, and so the baby bonus is applicable to all. There's no means test. Everybody gets it. So yes, I was on welfare. I received the baby bonus, and so were all kinds of dentists who sure.
We're all on the dole.
So
Uh,
similarly, a guaranteed annual income could help those people who are going to be displaced and who are not capable of being trained.
Okay, here's my thoughts. There are a lot of jobs available for cash. So one who is getting guaranteed income, he can work somewhere part-time or even full-time for cash, and therefore he would avoid taxation. He would keep his guaranteed income, and this is, in my opinion, on a borderline of abuse of the system. So the easiest way to move into this system would be to eliminate cash. There will be no cash at all. People
Yeah.
are paying by credit cards, debit cards, whatever, but no cash. So this way, you would eliminate abuse, period, because if you would work on some kind of a job that you found, but it's non-cash, so you have to report it because you will get T4 slips or so on. So this way, people maybe if they will find a job, they will have to forego their guaranteed income. So people will become avoiding finding the jobs. But if you will make the guaranteed income low enough, so people would
Right.
be in a position that almost any job will bring you more money than guaranteed income, yeah, that's a
Let
possibility.
me mention a few things about cash. Milton Friedman of the Chicago School of Economics talked about 4 ways to spend money. One is the way I spend my money on myself. 2 is the way I spend my money on others, the Christmas gifts, the birthday gifts, and so on. 3 is the way I spend other people's money, such an expense account. That's completely different. 3. And 4 is the way other people spend other people's money, which is government, which is the least effective way of spending money. Now, Thomas Jefferson never heard of Milton Friedman, but that's why Thomas Jefferson wanted minimal government, an idea which died with Thomas Jefferson, by the way. and so
I have to. This is a fascinating conversation, but I want to think about these things in a different way. What we're against when we talk about government inefficiency is bureaucracy, and of course, bureaucracies are inefficient. So we want to streamline, but that doesn't mean that there isn't a role for government, and there's an important role for government to play. And when we talk about this kind of thing about like a cash bonus or something like that, people think about the abuse, and when we talk about the changes like AI, like the steam engine, there's a massive dislocation in industry, and people lose jobs, and people panic. And so what you can do is you can say, yes, I'm for progress. I don't want to stay I don't want to stay without the steam engine. I don't want to stay in that environment. I want to make progress. I want to continue to accept new technologies and exploit them. Yet, I want to be sensitive to the economic dislocation that they cause. And this is the role the government can play.
This is why I talk about a guaranteed annual income. Let's take a look at to compare this to
one possibility, but it's the role the government was meant to play.
Let's take a look at the grave robbers in ancient Egypt. What happened when a pharaoh died? They buried the pharaoh with an enormous amount of wealth, and the grave robbers took that wealth out and put it back into circulation. Society was better off as a result of that, and people using their cash for business are going to use it more efficiently than the governments are, and society would be better off, just like ancient Egypt was as a result of theft by grave robbers who then brought wealth out of the ground and brought it back into
I think grave robber is a good name.
Yeah.
Not all businesses are the same. And I just mentioned one CEO I was very proud to work for, but there's a lot that are not doing good for society at all. Quite the contrary. So when we talk about the government is bad and business is good, this is the kind of false dichotomy that we don't want to play. We don't want to fall into that trap. It's ridiculous. There's a lot of bad businesses out there that are exploiting.
The top of the list of bad businesses is Wall Street. They spend an enormous amount of time. All their meetings are devoted to figuring out how to get more cash out of our wallets and not helping us how to prosper in economics. Yeah. Wall Street is a primary example. We need them. We can't execute our orders without them, but we have to use them carefully.
But what I'm hearing from both of you is selling covered calls seems to be the modern investment strategy that you're both profiting from.
Or cash secured puts. Selling cash secured puts is just as good. So if for example, if Nvidia will be taken away from me because of the covered call Monday as alternative to buying Nvidia and selling covered call, I can sell cash secured put.
Actually,
in some ways, it's even more effective.
It's more effective, but it's not allowed in tax-advantaged portfolios in Canada. It is in the United States, actually. And I wrote to our Minister of Finance about that and asked her why that's not allowed. And I still haven't gotten a response. I will. These ministers always respond. Sometimes it takes them a long time because they probably get 2,000 letters a day. But that's the right way to do it, certainly in the United States. In Canada, what people can do is outside their tax advantage portfolios,
absolutely,
open an account that will allow that type of trading.
Absolutely. Yeah. That's what I do because it's a fund portfolio where I'm doing that, and it's not cash tax advantages account at all. It's a simple cash account, which I pay taxes if I generate substantial profits, and then if I have losses.
One of our members, Sasha, is doing that in her core portfolio. Doesn't have a fund portfolio anymore, just doing what you're talking about, sell covered calls just out of the money or cash secure puts just in the money. That way, on a Monday, expiry date on a Friday, that way you generate the greatest revenue possible, and the returns are astounding. You don't need a lot of cash to make a living. You can do it in under $700,000.
I totally agree with you, and it's just my discipline, of which I don't have a lot of it, but I have some of it. And that discipline does not allow me to do any trading or fancy option strategies in my core portfolio. It just generates dividends. The only thing is dividends I'm taking out and put into my fund portfolio. So
there you go. Yeah,
the dividends only. I don't sell any position.
You're playing with house money is the way I look at that.
Absolutely. This is why I love dividend stocks, and I think in many cases that's the way to go. And now coming back to artificial intelligence, I have exposure in my fund portfolio again into two stocks. One is AI, which stands for artificial intelligence. It's trading now close to $18. And it was just a few weeks ago, it was $30 stock, but then there were some letters from short sellers to Security Commission that there are some irregular reporting. Financial.
What was the symbol again, Sasha?
AI.
Just AI, right?
Yeah, just two letters, AI.
I thought you were, okay, I got confused. That's all right, thanks.
And by the way, even on this stock, I sold June 16th, 20 calls, covered calls. Yeah, I sold them. So I have protection. So it will go down to, let's see, even $16 a share, I'm still covered. I don't think that it will go lower or much lower than $16, I should say. So I'm okay with this position. And another stock, I have many more shares of this one. It's Unity Software, the symbol U, one letter. So on that stock, it's now trading around $27. And I also sold 29, April 28, 29 calls. Most likely it will expire worthless this Friday. And I will sell a bunch of other covered calls. And so why it will make its move? It was also like a few months ago, it was $40. So I was watching the stock, it's coming down to 30 or 28, it goes up to 38, 40 or so on. So now it's kind of accumulation is at $27. But in the meantime, because I don't know when it will start its move, I'm generating additional income by selling covered calls.
Yeah.
And watching the stock, just waiting when it's going to move. Hopefully much higher than that. But we'll see. We'll see. Sometimes it's not going according to your estimation. So you have to be very humble and just sometimes wait. Another stock that I'm following, it has earnings in mid-May. If you heard Palo Alto Network stock, now it's trading now at around 185. And I sold also covered calls that expire May 26. I sold 195 calls. At that time, I closed my position at pretty good profit because the stock went down from that time. But when it will come close to earnings, maybe a week before earnings, I will buy back this covered calls. Probably that's what I'm going to do. So there are a lot of interesting possibilities, and as long as you pick up the right stocks in the right time, you look at the earnings reports and the calendar of earnings. Also, when you look at the earnings, there is a number as a percentage expected move either down or higher.
Yeah.
Some stocks have a number like 15. Some stocks have a number 3. So it's only 3% deviation from its trading. It will go higher 3% or lower 3%, of course. So
you have to pay attention to volatility.
Tremendous use of the tools.
You know, Sasha, you're talking about how you invest in dividend-paying stocks. I had a number of patients, elderly people, who had a portfolio of half a dozen dividend aristocrats. That is securities which paid an increasing dividend every year for more than 20 years. They never looked at the market. They never looked at their stocks. They cashed in their dividends so they could.
Well, I agree. For core portfolio, it's a wonderful thing. Now, for fund portfolio, I would disagree with that because there are much better opportunities and you can make way much more money.
Well, core portfolios are supposed to be boring, and this was what I described
exactly.
here is boring. Yeah,
exactly. Yeah, I mean, I don't even want to play with my selection in my core portfolio because I'm quite happy with the dividends that they're
If your fund portfolio is boring, you're doing it wrong.
Yeah. Well, fund portfolio is a different thing. I can experiment. I can use a lot of tools. And
Sasha, what makes you interested in a stock? Like you talk about, you do have a discipline about like maybe earnings are going to come out. You check to see how volatile the stock is, and you do certain things. But what makes you narrow in on a single stock?
Okay, first of all, you have to see at least 3 months chart for a stock and 1 year. I'm always looking at this too.
Yes.
Then I'm trying to see in what sector the stock is located, what industry. And then important thing is the volume of trading. If you see increasing volume, that means more interest from investors to the stock, whether it's professional investors or just
So you
casual
track
investors.
volume over time, and you want to see an
Yeah.
increasing trend. Or
Exactly. I love the stocks that started to move up. Let's say it's in a base pattern, and then it starts moving up. The moment it starts moving up, I'm a buyer. Even if I'm late, let's say stock is trading at say $20, it moved up to 23, 24. I'm a buyer. Even if it went 25, 26, I'm even more buyer because now it proved to be a very strong movement, more money coming in. So that probably will continue.
but
By
you're
the way,
tracking the volume. That's what you're looking
the
at.
volume, absolutely, the
Yeah.
volume. And look, if stock is climbing higher and volume is increasing, what else do you need? That's all what you need.
You know, you're talking about momentum investing, Sasha, which makes a lot of sense. And it's quite the opposite of people who want to buy low and sell high, not buy high, but sell high. And so the important thing is not to mix these two systems up. Stay with your momentum investing or go with the way we talk about as the market drops, we buy more. And if it drops even more, we buy even more. And if it sells, rises, we take profits. The important thing is not to mix up those two styles of investing. Both work.
You know my style of investing. If stock moves higher, I buy
And
more shares.
Try more. Yes, income averages on the way up.
Buy even more shares. That's where all the great traders, that's how they made their millions, not by buying low, sell high. Because this strategy, see, when stock is going down, it has, see, it's for a while, at the end of the day, most likely you will make money. The problem is that for a long period of time, it's a dead money. You are following the stock, it went down. Now, it has to, number one, stop going down. Because if it continues,
The only security which has stopped going down for at least another 100 years is the American economy and any security that tracks it. Individual stocks can fall out of bed after many years of rising. You know, there is Enron and all kinds of Enrons out there, individual securities. No, you have to use the system where you buy low and take profits when it's high with the entire market using an exchange traded fund which tracks the entire market. With individual securities, it's a risky thing to do. Yeah.
Look, Milan, I did a little bragging earlier about getting out before the dot-com bust. One of the things I did was buy corporate bonds, and one of the corporate bonds I bought was in Lehman Brothers. So I thought it was too big to fail. So you could always go wrong with, even when a stock looks like it's going to be around forever. It's not necessarily true.
Milan, but if you exclude Enron and other calamities, there are many S&P 500 stocks, individual stocks, that are going down. There are stocks in S&P which are going higher. So what's happening is that the stocks which are going down, they eliminate your profitability on the stocks. And I showed you earlier in the program, 4 stocks that contribute to 43%.
Let me ask you this, Sasha. Why Warren Buffett has outperformed any other investor over a 50-year period?
I'm not sure about that statement at all, because
it's not far. He's done well. Would you buy into that?
done well. Yeah.
Okay. He's done well. He actually has outperformed. That's available. That information you can dig up. But never mind. He's done well. He wants now the system that we're talking about for his wife. For his wife, he knows she's going to outlive him, and for her, he wants whoever is managing the money for her to buy and hold SPY and buy more when it drops and take profits when it rises. Now, there's an older dentist who was older than Warren Buffett, and so he made an incredible amount of money by doing the following: half cash, half the stock market. When the stock market drops 10%, he puts a third of his cash in. When the market drops another 10%, he puts all of his cash in. When the market drops another 10%, he borrows money.
Okay, Milan, couple of things. Number one, he doesn't consider his wife to be a super trader, and all he wants her to retain whatever he left her with.
He's
Number
taking
two,
care of her. Yeah.
Number two, Warren Buffett very often writes and says one thing and does absolutely different things.
He does.
Good insight.
You have to be aware of it. He had a long time ago, he said he will never, ever touch the stock that he doesn't understand. He never buy high-tech stocks and all that stuff or so on. And the next day you learn that he bought millions of shares of Apple, for example.
Yeah.
So on. So it's almost a mythological figure, Warren Buffett. I don't see.
I owned for 10 or 15 years, I owned nothing but Berkshire Hathaway. And he has meetings over there in Omaha. And my wife and I used to go to those meetings. And the criminal activity about those meetings is hotels will rent you a hotel for 4 days. You cannot rent a hotel room for 1 day, for a 1 day meeting. And then, of course, the prices of the hotel rooms
are
sky high.
They have you, yes.
Yeah, but he was very impressive with his honesty. Both he and his partner, Charlie Munger, were able to impress me to a significant extent with their honesty, which is rare on Wall Street. Yeah.
They're very good talkers, number one. Number two, as I said before, they were talking about one thing, and in reality, they were doing different things.
Well, we could all say...
But you would learn, Jim, but you would learn about it not when they bought Apple. You would learn about it next 3 months later, next report. All of a sudden, you see, they own now 7 million shares of Apple.
Yeah.
Oh my God! And Apple, in the meantime, moved higher, of course, just on Warren Buffett's buying those shares.
You know what they're doing, it's because they want you to know. Otherwise, you don't know. But I always say that if you're going to invest by the rules of thumb, you're going to lose your thumbs.
And finally, I would like to address one thing, is Milan, that you were telling me and the audience that you can be successful in momentum trading only on a hindsight. Now, I was always openly talked about the stocks that I was buying and expected them to go much higher. It's not only NVIDIA, it's Lululemon, it's also several other stocks that I was, the latest one I think was Goldman Sachs, JP Morgan a couple of weeks ago. So is that the hindsight if you're following well-known stocks? Is that information is available at a couple of clicks to anybody who cares to learn about the stocks or even investigate it a little bit further? So I would exclude the hindsight. Hindsight is something if somebody gave you a hot tip about some kind of a mining stock and all of a sudden they discover 10 million ounces of gold and stock went from 20 cents to $25 and 20 cents. That's not the case with me. I don't
the three of us don't need to report to anybody except our spouses, perhaps, when we buy or sell. Warren Buffett does. When Warren Buffett undertakes to buy a security in the huge quantity that he does, it has to be reported and it's immediately available to everybody.
And it's the same day?
He can't lie about that.
Next day, same day when he buys it?
I'm not sure.
It's impossible. It's all revealed only in his next quarterly report. Then you can follow his addition to his holdings or whatever.
Hold it. No, he reveals it in his next quarterly report. But the SEC requires large buyers.
I see what you're saying.
What they've done is reported the next day or 2 days later. Yeah.
And I've never seen information earlier than its mandatory quarterly report.
Well, when you buy or sell in large quantities, it does get reported, as Milan's suggesting. And you do read about, for example, I had Taiwan Semiconductor, and I had mentioned it a couple of times, and then Berkshire Hathaway bought it, and instead, I was pleased, and then not very much later, it sold it. And so both the purchase and the sell were.
So that what we called momentum investing. So Warren Buffett is doing a lot of momentum investing, period.
It was not a buy and hold. No.
He is not holding that. He bought it at, say, $76 and sold it at $77 next day. So it's a momentum investing.
So when he says that his favorite holding period is forever, is he lying?
It's a tongue-in-cheek thing, and it's also all of these things like the rule of thumb. He's giving you a perspective, like buy and hold is generally good for the most people, but it doesn't mean that he's going to buy and hold forever everything. He's not trying to teach you what he does. He can't do it. He can't teach you in 10 minutes.
What he's doing is do what I say, not what I do. That's exactly what Warren Buffett does. It works for him, though. And I'll tell you that 50 years ago, his strategy was very sound. And that's
and it's good advice for most people, for many people.
Yeah. The only thing I have a problem with the stock, his stock Berkshire Hathaway, is that because it doesn't pay dividends, you can enjoy the profits only by selling the stock and paying all taxes and all the stuff. That's a little bit drawback of the stock. And also, if you compare his results with some of individual stocks today, he will never achieve similar results at all. His results are the best are so really. If you take last,
the giving dividends decreases the value of that security immediately, not the price of it, but the value is decreased exactly by the amount of the cash that has left the company by way of dividends.
It is a subtraction of cash, absolutely.
But if you read the book that I always recommend, Market Wizards, I'm not going to show you again, but
You know what it looks like now.
Market Leaders?
Market Wizards.
I'll show you one more time.
Market Wizards, yeah, okay. Yeah, I'll get the book.
I'm going to have to get it too now.
One of the, they're probably newer. I have one of the oldest editions.
Yeah, sure.
But they're probably much better and newer. Not better necessarily, but newer editions. So not one, but actually a few stock traders. I'm not talking about futures traders or the commodities or so on. Just talking about stock. A lot of them were saying there is no reason whatsoever to hold the stock if you're not paid dividends, because you're taking a risk holding somebody's stock. So you have to be compensated for the risk you are taking, because if you are taking the risk and holding the stock, it can go higher or lower or so on, and you're not compensated.
I believe in being compensated for taking risks. Milan, how did you make any money just buying when you were buying or holding Berkshire Hathaway? You had no income from it. Is that correct?
I was practicing dentistry. I was making money as a dentist. Dentist is all right. Yeah. And then we have to invest in something because we usually, even though dentists tend to spend more than they should, usually have some money left over that they have to do something with. So by buying Berkshire Hathaway, I had to pay no attention to it at all.
That's it. Yes.
Yeah. Okay. In this situation, it's working strategy. Right. So finally, we agreed on something. I would like you to have a successful week of trading.
One more thing, Sasha. I want to thank both you and James, Jim, for supporting our chess operation. Thank you.
Yes, we are looking forward finally to beginking of this tournament, which is a little bit over a week from now. In the meantime, we are following this crazy world championship without participating world champion. But nevertheless, it's quite a show. It's very interesting. Yeah. And there are 2 more games. And on Saturday, on the chess program, we will discuss the championship. Again, thank you very much, and we'll see you on Financial Show next Friday.
Bye-bye.
On Chess
Always
Show.
fun.
Bye-bye, everybody.
Yeah, bye.